Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Yeah, thank you, Ed. Thanks, Stephen. Good morning, everybody. Welcome to the Trader Lab. I'm your host, Tom Byrne. Appreciate you stopping by today. I stream live Monday through Friday, 11:30 to 1 p.m. Eastern Standard Time, and this stream's about integrating Bookmap order flow tools with auction market theory in the developing time frame using a volume profile. Today's been quite interesting. Yesterday we had a nice reversal, and today we are basically in balance, which means two-sided trade. So we'll take a look at that today. And this is a specific condition of the market. And in the Trader Lab, we have trade plans specifically for this condition. Also, the thing about the condition is once you recognize it, you really need to be operating with a different, not only a different mindset, but different processes, different targeting, risk management, etc. And many traders, as they develop, basically tried to have a one-size-fits-all process. However, the market is not one-size-fits-all, and that's what we'll go into. And again, thanks so much for visiting the Trader Lab today. Let's take care of business. Grab a pen and a piece of paper. I'm going to be giving you some statistics just to help you gauge some potential processes, and we'll go from there. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is for educational purposes only. And none of the trades you see here in the stream are trade recommendations and are based on structured trades that are available to everyone in the Bookmap Discord Trader Lab chat. And that's all available at no cost to any of you who are interested in a community of traders. One moment, I had a little technical thing going on here. Just a second. So grab your pen and a piece of paper, and I'll give you a couple of notes, and then we'll get into it right away. First of all, yesterday was a terrific reversal day. Remember how this tends to work. The market, write this down. This might seem very obvious, but we're in the heat of battle, if you will, and focused on the condition of the market. There's a lot of things that we forget. First of all, the market goes up to go down, and the market goes down to go up. So what did we do on Friday? The market went down to our primary target, which is around 5206. And those who've been following the stream, and Friday's stream is available. I have made it public, so it's out there in the interworld on YouTube. If you're interested, just plug in Tom B and Bookmap. The other thing is in that targeting, which is important about a intermediate time frame target, is that we reversed off it. That was the low of the day. Now, nobody, and just want to let you know, nobody knows it's going to be the low of the day. So don't think that there's any, that doesn't exist in trading. All levels are created by participant behavior, and what may or may not happen, it's a suspect until you get other alignment, and then potentially triggering structures, et cetera, all of which is part of Trader Lab. And the 60 PDFs of these structured trades you can download. So you would see this in those PDFs if you took the time to go through them. Now, so if that's the low of an intermediate time frame and it creates a reversal, that means the shorts who got short on Friday got squeezed out. Okay, so we had a great reversal day. That is the low in the intermediate time frame. So 50, 205, 6, whatever it is. Now, yesterday, what do? We open, we sell down early. Remember, so the market goes up. First of all, the market goes down to go up. So Friday it went down to go up. Then yesterday it opens, and what does it do? It goes down to take out the weak longs and fill in some structure from Friday, and then closes up towards the high. It goes up. So new sellers come in, it goes up. So now today, what do we have? Longs in the market. What might the market do? The market, well, either might continue from yesterday, continue squeezing, or market goes down to get more shorts in the market. Now, we have a lot of economic reports this week, so there's a lot going on, as you guys know, and you should be checking your calendars at the beginning of the week to know what's happening, because you can anticipate participant behavior in front of substantial reports. So now we're going down. So the market goes up to go down and goes down to go up. So potentially, and again, nobody knows, this is part of the joy of being in a random environment, is the market might at some point today go up or not. Nobody's predicting, but we do understand market mechanics. So now here's some statistics. We opened lower inside of yesterday's range. Lower relates to the previous settlement price. Hold on a second here. I've got to move some charts around. Just a second, guys. This is like walking and chewing gum, So I have to try to keep things where I can see what's going on here in the current market, too. Okay, sorry. Okay, so here's the statistics. Very simple. The let's get this moving over here. Okay. So this is the RTH open. This is the ETH, overnight volume point of control, which is basically your retail price. That's where the highest volume was in the ETH. Think of it like shopping, and that's the agreed upon price where most of the business gets taken place. The overnight, so that's 83% probability we'll hit that. Now you're going to say, gee, that, okay. But the market, it's in relation to the settlement, not in relation. So it's where the open is in relation to the settlement. The statistics have nothing to do with where the open is in relation to the stat. It's where it's in relation to the settlement. So if the open was up here someplace, that probability of getting back here would still be 83%. So that's how you might use statistics. The overnight mid here, there is a 83% probability to get to the previous close, and write these down. A 72% probability to get to the previous point of control, about a 70% probability. This is the previous point of control. So starting out, you have this. Let me see what else we have here. A 69% probability will take out the first hour's high, which we have not done. A 66% probability to take out the ETH low, and a 59, or let's say 60% probability to take out the first hour's low. So, so that's the lay of the land statistically. And you have to vet these for yourself. Past performance not indicative of future results. By the way, if you have questions, please post them. I'll do my best to take a look. If it's a technical question about Bookmap, you should check the knowledge base or reach out to support. I'm not able to do that in the stream. So let's start with the RTH open. Now, so you guys know, now we had Jolt's job report, and these employment and economic strength are key elements that may impact Fed policy regarding reducing interest rates. And there's quite a bit of debate whether that'll happen or not before the election. As we approach the election, the Fed is not going to want to appear to be political. So if things don't happen real soon, it's not going to happen, in my opinion. Now, it can happen. My opinion doesn't mean anything. But having been around this business going on 45 years, I've seen a lot of things. And I do understand the Fed, while it wants to maintain independence, and Congress can certainly change that, basically, they just don't want to appear partisan in any way. So if they don't get it done soon, it's not happening, in my opinion. Now, that changes. It's kind of like one report comes out, inflation's a little higher, market does the Acapulco cliff dive, and then the potential for a reduction. You get a JOLTS job report, wasn't so bad, it's kind of good, we got a positive response initially off it, then it's, maybe they are going to, we're kind of flipping like a fish on a dock. So, RTH open. Now, there's a couple possibilities. Now, I came in looking for continuation higher based on yesterday's close. Now, the fact I look for that is there's always two possibilities. And guys, if you're visiting Trader Lab for the first time, welcome. There's a lot of resources available to you at no cost. If you're in YouTube, there's a link in the bottom of YouTube. You can download the structured trades I'll be discussing here in the stream, plus a library of webinars are available to you. And of course, the Bookmap Trader Lab community, which is a serious community to build out trade plans to participate in the market and to generate a statistical edge. That means only participate where you have a probability that favors you. And this is really what gaming is and how casinos operate. Basically, they only play games that have a vetted structural edge. They play them the same way. They're not attached to the outcome. And yes, the gamblers get paid. And the casinos also pay for your buffet, your cocktails, and tickets to Adele. And the gamblers. So it seems to me, even though everybody gets paid and they have overhead, over time, in a random environment, they extract dollars from the gamblers. So in the Trader Lab, we view the business of trading with that model. Why would we use that model? It's successful. So, first trade we're looking for is a long. However, we have structured trades in the Trader Lab. I'm going to show you the first trades. And again, past performance not indicative of future results. And these are structured trades. Now, whether you take a structured trade is subject to your vetting and trade plan. As you develop in Trader Lab, the whole idea is that you build a template, a process that you now can build a business, kind of a platform of building a business on. And the business of trading is built on structured trades, in my opinion. And then once you understand this business and how the market operates, which is and write this down, a random environment, or a random distribution of outcomes, just like the casinos. They don't know cards coming out of the deck. They don't know how gamblers play cards. They don't know any of that. So since we know we don't know, we can't expect anything. We should just say maybe. Write that down. The best you have in a random environment is maybe. So here's what we have. We open, RTH open, and the market runs higher. Okay. I'm thinking longs. Well, the market ran away. I don't have a trade. And I'm going, darn it. Darn, I'm just saying that's a way to say it. So market goes up. This is VPOC migration. Now, right here, it looks to me like we're going to continue. However, let's look. I have high probability statistics below me. I checked the overnight volume point of control, and in theory, this could be a long. So I have no way to get in here. So my first opportunity is going to be here to get long, and I would be going, let me just show you where I'd be going. Here. So I'm looking for a long. So let's look. Now, right here, this is the developing volume point of control. So think of this like a retail price. Too low, too low, too low. I'm going to mark this. And this is the developing volume point of control. And all it is, and what volume profile is, there's nothing really magical about it. It just measures volume and price. And volume and price is like if you go to supermarket, volume and price is where the business is taking place. This starts at 0 at RTH open. So just so you understand, as volume and price are going, this is now retail. I think of this like shopping. So if this price is too low, we're going to push off and the volume and the price, and I'm going to move through to statistics. I break below this. Now, right here, I've got my mid VWAP and I have my variable high volume node. So I know right here, maybe too high, maybe too low because I left it. So this is resistance, this is support in volume world. So I'm still thinking going up. This is my support. So watch. So this crosses over. This is a deer in the headlights moment because this is support. This is resistance. If I get long here, I got to clear this. If I don't clear this and I fall under here, then it's the Acapulco cliff dive and it puts my statistics overnight mid. Remember, you wrote this down. This is why I go over these things. 83% probability. And there's one more. Naked volume point of control. I think it's about a 70% probability. Past performance, not indicative of future results. So I know if I can't get above this, I fall under here, then I'm going here, here, and wherever. And that means, remember, the market goes up to go down, and the market goes down to go up. The market went up, who knows? And yesterday, the market went up. So if the market went up, the market can go down. Why might it go down? To get the longs out who are sitting in here from yesterday, the weak hands, and then get these buyers in. These buyers, sell stops are under the opening swing low. So you just have to be conscious and write that down. Where's the opposite side? So early buyers for continuation trades, that's what I was thinking, with no entry, have their stops under here. So I know if I come down here, there's a couple possibilities. I can pop the stops, revert back in, or pop the stops, test, fail, or whatever. And then we go into, let's see. So let's see. VPOC migration. So let's read the language of the market. I don't use indicators, and I have to point that out to you. I'm not saying you can't, but if we think about what our indicator's job is, it's to translate behavior in a lagging look back, somewhat price-oriented nature. It does not take into consideration the context of the market or the conditions. In other words, what are the conditions? Market's long, that means sell stops. And we're thinking continuation. Well, if this, then that. If not, if this is too high, then what? I break below. Now there's more volume here, and that's why this yellow line drops. There's more volume here now. So it's like this was too low. This is too high. Let's go back here. We don't like this. And now right here, either we take out the stops and we're going to find our buyers and come back, or we're going to take out the stops, and if we can't get back over mid VWAP in this, and we stay under here, and then we have our stats. I hope that makes sense. Long explanation, but this is Trader Lab. And that's a short in the Trader Lab. Where to? Here for a scale. So for me, once I see this, I'm looking for a short. Now, the better short for me, and since this is early, this is called VPOC migration. It's a structured trade. I know this high volume, and you can see it there. This is a micro consolidation. Too high, too low. That's the chop. There's a retail price. Think of this like a store. That's how I think of these. Shopping. That's all this is. Shopping. We're all shoppers for S&Ps here. If this price is too high, the participants decide we're not paying for this, we come back. And then we find it, we go back to the price. If this price is now too high and nobody's willing to pay it, hasta la vista, down to our statistics. Long explanation, but this is Trader Lab trading. Not saying it's good, not saying it's bad. I'm just saying it is what it is. So, statistic. This is a scale in the Trader Lab. And we have this as our next target. Now, what I always do, I front run them by 2 ticks, But let's look at another structured trade, as long as we're hanging out together. What's this? Variable high volume node. What do we get? VPOC migration. This now is too high. This is my next target. So in the Trader Lab, it's shorts really from here. This could be an add or nothing. This right here is another structured trade, but it's a little bit more advanced, and I'm trying to keep this to the broad strokes, okay? Back to here. Looking good, Lewis. Now, I see this come into the book, and I'm sitting in this trade, and I'm going, you know how we are. It's because it's all nebulous, it's all maybe, and who knows. So let's go try to see what. So I'm looking at this, and I have a target over in here, and I'm going, well, maybe, But I want to be long. You see, part of it for me is it's conflicted. Remember, I want to be on the long side, but I got to follow my plan, which says short. So out in here, I'm thinking about, well, if I come outside somewhere and I get the week longs out, remember, I'm bullish, actually. The higher time frame or intermediate time frame is up, so I'm thinking short to get long. I'm just letting you know. Now, part of the joy of trading is, where do you do that? And I know you're asking that because I'm asking the same question. What do I do? Where do I do it? So let's go into a little microstructure. If this is too high, and this is now my retail price, which, by the way, I'm going to label, if I don't do this. This is a process. Now, when you're learning to think like a casino, if you will, and follow the participant behavior, not an, quote, indicator, because everything is based on participant behavior. So for me, my indicator is this, the participants, not a lagging look back that is not aligned with the condition of the market. And it's just a personal choice, and it's my choice because I've done all the other stuff. And when you have a high tier order flow tool, don't you want to be operating right here, not this or here? If I'm going to do something, this is an ad in the Trader Lab, right here. Hold on a second. Okay. I hope that makes sense. By the way, do you guys have questions? Please post them. I'll do my best. Thanks, Stephen. Hi, Gary. Okay, let's see now. So this is an ad in Trader Lab if it's your thing. Now, this comes into the book. Let's look at a couple other little pieces. The market is short. So I am clueless. So I was going to show you some trade management. Here's volume in the microstructure. Buyers are trapped here. Selling iceberg. Let's just watch. Leg down. Chop. What is this? A micro consolidation. Let me show you how you can use this. Now, when I say how you can use it, I want to clarify you have to vet it, and this is all time frame specific. But the thing about trading, and I mentioned this the other day, I always want to reinforce this. I am trading, or what we do as day traders is we're pretty much trading in what's called fractals. And the thing about a fractal is it's not time-based, it's structure. So, for example, this leg down is a fractal. If you're in a higher time frame, this is just one big candle or bar, whatever. But in a shorter time frame, these are, rotations. So they're fractals. They're inside of higher time frames. If you put a 30-second chart, a 1-minute chart, 10, 15-minute, 60-minute chart, daily chart, side by side with no numbers, they look exactly the same. So in the Trader Lab, what we're really doing is using microstructures for triggers inside of higher time frames. So we can catch the swings, but we can enter, hopefully, on a timely basis with tight risk or structured risk. I hope that makes sense. So anyway, this is, short. Now let me show you the trade management. So this is too high. This is also a short trigger. See this consolidation, too high. I'm not paying that. hasta la vista. Here, chop, 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 break low. It's too high. I'm not paying that. Watch. I'm going to take this off the chart. This shows the liquidity adds and pulls. You know, I like that, but it makes things a little noisy here for you to see. So I'm just going to take it off. Where are you? Called the liquidity marker. It's very cool. Now I have the heat map, shows me similar adds and pulls, but the liquidity marker actually quantifies it. And it is useful, very useful for me. But I want you to see structure. So here's a consolidation. Here's a buyer. So right here, these sellers are potentially under the bus, these guys. The buyers take a shot. Now there's no buying above this guy, and then the sellers take over again, you see? So this is too high. That's resistance. Look at this little node right there. That's a high volume node. Now let's talk about what it says. This is a consolidation. And you know what is on a consolidation? The sellers are up here, the buyers are down here, and inside of a consolidation is volume. And think of it as shopping in your down the street little store. Pint of ice cream Saturday night. You'll get some participants in the ice cream aisle, but if it's too expensive, they leave the store. So this is too high. Now, what happens if you have buyers here? There's sell stops below here. There's going to be sell stops below here. I'm just saying, and wherever, right? And there's going to be buy stops above here. So if the buyers can't get lit up, and remember, this is also a micro consolidation. Your stop could be here. Once this breaks, your stop can go here. Now let's keep looking. Micro consolidation here. Buyers. Where does this thing fail? Up here. Sellers. Now right here, these guys, we want to see continuation. You know, I also want to win the lottery, except I don't play. So this is too high. Right there, right? High volume node. So let's look. Buyers, chop, 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 break low, micro, high volume, buyer here, stop. Once you break below it, it's a micro trigger, which is below this trigger. Stop can go here. So you're in this short, and this is just the idea for trade management. You have to vet it, and you get taken out here. Okay? And that's what happened to me. C'est la guerre, as they say. What do you think? Now, before I go on, any questions? Because there's more. Okay. So this is our variable high volume node. Now, this is a condition in the market. Now, this is well, we're in 4 minutes. Isn't that something? So this becomes something called potentially mean reversion. That's the mean. If the market gets too low, now remember consolidations, right? If the market gets too low, it can come back to the mean. Now this is the joy, because you don't know, you know. So for me, I'm only on the short side here, monitoring and managing my trade. Once this happens, then I'm thinking, okay, outside in and potentially up. So that's kind of where my brain is. But I got to be conscious of the first hour's low, if this indeed is the first hour's low or the first half hour's low. So let's just watch. You see what we do here? So this right here, now when it comes back here, it is telling at the time, and this is a specific trade plan. It's called mean reversion. I don't know where the low is. So I'm going to let you know. I see this and I go, you know, because that's all I can do. I come back here. Now there's a couple possibilities. I come here, I bounce off and pull back outside and come back to it. Or I come back here and blow the shorts out and squeeze them. Let's see what it does. See what we have? So this is mean reversion. So when I cross over this, and I don't like, by the way, this is my least favorite condition, because, and here's what's very hard about it. Where's the outside? Wow. I'm just taking a look at the current market. Oh, we had a nice structured trade there called the IB continuation. Guys, remind me to go into that one. Nice structured trade. So we come outside to where? Variable high volume node. Let's come back. Right here, this was too high. I want to show you how this might work. So too low, pull back, cross over. Once I'm crossing, I have to look at what was too high. Well, this was there, and then this was. So I'm looking at this. I'm going to tell you what I was thinking. I looked at this and I said, well, that's a short, except I can't take it. Why not, you ask? Because this is too close. So if I'm going outside in, I can't trade this. Now, what's important for you guys is to understand why it happened. Because the market goes back and checks pricing. Is this too high? Well, I'm not paying that. Why? We wouldn't pay it over here. We came back and checked it right there. That's a short. Too close. Can't take it. Where do we come back? Right there. Can't take it. Can't take it. You see the behavior? This is auction market theory. What the market is doing is it's testing this price and going, I'm not paying that. And then we rotate back to the mean. It's called mean reversion. The problem is no range, at least not for me. If you can thread a needle, that's great. I'm not that skilled. So I'm working on that, right? I'm looking at it like, well, if I come out here and I find that this is too high and I've got this liquidity, then maybe I can now do mean reversion. So let's look at it. Notice the symmetry. Now, this is also the opening swing high, right? I believe. Yes. So I pop, I take 86 buy stops. Thanks for playing. So right here is my location. Now, I also know it's the opening swing high. So what do you expect or anticipate? You don't expect anything. Buy stops. Now, I'm either going to get buyers above this and off we go, or I'm going to mean revert. So I have two possibilities. So this, remember, I'm in two-sided trade. So I'm prepared for either. So what do I get? My buyers, I get a selling iceberg. I've got my buyers now, and I have my sell stops under here. And if this is mean reversion, I'm going to come back here. This is a test of the micro high volume. There's your buyer. Buyer trapped here. Sellers activated. This is a trigger in the trader lab right here. This is a short right here. Stop is here. And either you get stopped out or it mean reverts. Mean reversion. That's your scale. Now, either we bounce off of this and keep going, possible. Oh, is this too low? Or we don't get outside, and now we take out these guys. So let's see what it does. Mean reversion. And I underline the term mean. Where's the stops? Under here. See? So this is a short. So these are trades. These are Trader Lab structured trades. So anyway, you can see there's some nice trades in here. Now, the thing that's very hard in mean reversion is waiting and being patient. The better triggers, and I've mentioned this many times in Trader Lab, and many of us, by the way, we're all subject to FOMO and losing our minds. So that's part of trading. Managing your emotional states and not being where you have to trade. You don't have to trade. What I think is more important is waiting for the trades that favor you, that give you the best chance. What's the best chance here? If we thought this was the short, and it might have been, you need to be waiting for a retracement and a reversal. It didn't do it here. Here it comes up, and remember what we know, opening swing high. You would not step in front of the opening swing high because what is that? What's at the opening swing high? Stops. So there we go. Now you see your seller. And if I don't get buying above here, then mean reversion. So that's the trade. Here's the actual entry. Not this. Opening swing high. Is everybody tracking why you can't get myopic and just look at a line, but you need to think about the fuel? Does that make sense? Okay, remember, if you have a question, now we get the JOLTS jobs report. Everybody is euphoric. And I think now, okay, here we go, right? So off we go, and I'm looking for an entry. I'm thinking now we got our shorts, we got our fuel, time to go party and get long. So what do? I see this. Now we come up on the report, I see this, and I'm at a location. This is called the value area high. It is statistically valid in this scenario. Let me give you a statistic for this one. There's about a 59% probability, 60% that we might get here. Clueless, right? And I can prove it. I don't know anything. I just know maybe. I see this. This is how Bookmap can help you. I have this is the market pulse. This is a indicator in Bookmap. And we have the report. So everything got stretched out on the report. They ripped the sellers out, got this, everybody, blood in the street. And I come up and this comes in the book. So right here, and there's a stop sweep here. It's everybody's going nuts. I see this. And I will tell you, when I see something like this, I'm conflicted because it looks like it's going up. Why are these guys selling? So right here, selling icebergs, stop sweep, every absorption, it's crazy. So let's look. Sellers. Come back. This stays in the book. This is important. Now, this may or may not be a trade for you. I'm going to say because of location, and levels are like real estate. They are just areas for potential confluence. So this is a potential short and trade lab. Now, right here, I'm very clueless. But here's what I see. I have buyer. Look at the delta. This shows me the buyers are up here. This comes into the book, selling icebergs. I see my sellers. I come back, and there's nothing here. Where's my buyers? Where's my buyers? I get my sellers again. Where's my buyers? And this is somewhat disconcerting and confusing. Here's my high volume node. This is my retail price in this fractal, and it represents this volume right here. If this price is too high, remember how this works, and we leave the store, then maybe the participants are not willing to pay this. And I got this in here too. And I have the icebergs. So I've got selling. I see these guys drop down. This is a potential short in the trader lab. Here's something else. I get my buyers here. This is absorption. This is sellers. So I'm seeing lack of buyers, icebergs, liquidity, seller, buyers take a shot here, seller, icebergs. And this is where the trade fails over this. This is a short if it's in your plan, or it's nothing. And where are you going? Mean reversion. Back here. This is what's called outside in trading. Again, I don't like it at all, but it has nothing to do with what I like. So come outside. So this is your scale. And then you're looking on this trade. I was looking for it to take out the low. take this out. I'm sorry, this. So right here was this was the current low. I take another scale here and I'm holding a runner, just so you know, and not so much. So so here to here, or it could have been to the VWAP. You notice the absorption at the VWAP. That's the VWAP buyers. They might be right. We might pull the VWAP and come back here. So you can scale here. You can scale here because it's mean reversion, and you're looking to get the stops out, which are under this swing, the report swing, and under this low. So you could just be done with it here. It's all a matter of your plan. So anyway, we come out. I think we're going to zero, and not so much. Once I come back above here, I'm out of the trade. And then I'm going, what's going on? If you haven't heard that before, or you haven't had those thoughts. So let's come back and let's look at our structure. This is too high. Where was that? Let's go look now. And by the way, if you have questions, post them. Here's our volume, right? So I had here, and this is the last place the buyers took a shot. They are absorbed. Notice where I come back. Right here. You see it? This sets up another short. Now here's the problem with this thing. Can't enter here. Because by the time, at least for me, because I was looking at this and I'm going, and I need a trigger. So I break here, I pull back. So I'm looking in here because this is the location, and I want to see, I'm looking for a retracement, but I need this kind of seller. This is just maybe a hiccup, you know. So I'm looking for this, and then I need a retracement. See it? Is everybody tracking? Mean reversion. And yeah, you'll lose your breakfast, but that's mean reversion trading. It's outside in. And where am I trying to go? Here. Mean reversion. Back here. So this is a specific trade plan in TraderLab. Now I can just keep showing you these things, and I was on both sides of this. I was taking longs, I was taking shorts, I was throwing myself all over the place. I think I took a long here. I don't remember. I'm not going to go back in and look at my stuff because I just don't remember. Oh, I didn't take a long. Must have been one of these. I don't remember. I did take a long. I'm trying to remember. Oh, it was this one. Yeah. Actually, this is the first first hour's low. It's called the IB low, initial balance. And if we assume, underline the first part of the word assume, that we are in two-sided trade, this is a long in TraderLab. This is a structured trade. Let me show it to you. We come out under here. And if we assume at the time, and this is what you do in trading, based on the current condition of the market, is two-sided trade. And you see we're crossing this retail price, or the VPOC. So this is just rotational trading. When I come outside, this is the first hour's low. We have a structured trade in TraderLab called the IB failure, which is a mean reversion trade. It is designed once we come out under here, and if we come back inside, then this is the mean, and then it's a squeeze play. So it would be VWAP, mid, and potentially back across the range up to here, developing value area high. So I took this long. Let me show it to you. Yeah, and I almost lost my breakfast on it also. Let me show you the trade. Absorption. So right away, what do I have? Structured trade, markets in balance based on at the time, absorption right here. I get long here. I'm just telling you what I did. And there's other ways to get into this. Scale here because I anticipate mechanical sellers, and then come across to come here. out here. In other words, it's basically this: outside and cross traffic. This is like running across a highway, you know. So back to the mean and to the outside edge. And then maybe it continues, maybe it doesn't, who knows. So anyway, took the long, scaled. By the way, when it did this and I didn't get scaled, I assumed I was going to get stopped out. Now, I don't move my stop as much as I am. My emotions are going, bail, get out. It's going to fail. You're going to take a stop. What would that have accomplished for me? If I'm taking a structured trade and I have confluence and I have these shorts. See, here's the other part, the fuel. Market goes up to go down, market goes down to go up. So that's long. And now let's assume you didn't get this. You're asleep at the switch. You're out, walking the dog. Here's the volume. Here's the absorption. This is also along here. And here's what actually, I saw this, I was going to add. I didn't do it because I didn't get my scale, so I had full risk on. If I'd gotten a scale and gotten this, well, subject to your trade plan. I'm just saying what I would have done. I would have looked at this and either gotten blown out and, scaled, so I would have scratched, or if it held this, I would have put a couple back on for a return trip to here and then the squeeze out. So anyway, didn't add, but it could be an add, subject to your plan. So watch. See, scale, and then I was targeting to squeeze the mid and come out here. So I got everything off except my last one. So I scale out, I take my maximum scale here, I take a couple more out here, and then I have kind of the Hail Mary pass for out here because it's balanced, okay? So I got almost everything off except for what was out here. So that's still quite a nice trade for me. Anyway, now this, no clue, right? Because my trade was to come across. Didn't do it. Then we come outside. Now it sets up a different trade. This fails. We break outside. So we take this out. We're below here. This sets up something called the IB continuation trade. Now, I hadn't seen this because I was done with my trade. This right here. So I was out. Okay. Life in the fast lane. Now, we break under the IB. We failed to come out here. We failed to get over VWAP and mid. So that's the term failed. So here we break down. Now we pull back. This sets up a different configuration. It's called the IB continuation trade, structured trade and trader lab. What is it? Break, pull back, outside edge here. High volume is down here in the microstructure, which we held, and then we pull outside to our location. So let's look at the structured trade. It's a short, by the way. Here's your micro high volume right here. You see the buyer, lovely. Seller, you see right at the location, there's your seller. Now we know there's volume here where the sellers took over. Buyers are trapped there. You see this little guy over here? Not having a good day. Him, this one. So I'm looking here because I got to look left. I see we had the liquidity here and that basically the sellers were here absorbing the buyers. Buyers took a shot here. It got stuffed. Sellers in control. So right here is too high. Microstructure. Too high. Stuck. Buyer. Sellers in control. Test. Buyers take a shot. Sorry, no bueno, Charlie. Now, sellers. So what's too high? But here's my location. So I put in the pieces together. Here's my buyer. Uh-oh. Going to the moon, Alice. Seller. Now, microstructure. Let's watch. No buyer above here. It's a short in the trader lab. IB continuation. So then you're short. Then you got to get risk neutral. Oh, there you are. Sorry. So that's that, there you are. Any questions, guys? This is Trader Lab Structured Trades. So let's look at a couple other pieces here. Now, this still, if we come back across here, it sets up mean reversion. If we can't get back above here, and we may test it, then it sets up another piece. This, ETH low, which, and I know you write these down. I kid you about that because, we all have to, it's the joy of randomness. This has approximately a 66% probability that we're going to get to the ETH low. Past performance, not indicative of future results. You got to vet everything. And all of these statistics plus 60 PDFs of structured trades for you to reverse engineer and fit into your time frame or fractal. And by the way, what is your time frame or fractal? How about we are trading, think of Russian dolls, and they all fit inside each other. Fractals or time frames are really the same. They fit inside each other. I don't use time because I'm using microstructures, and the clock doesn't determine, this. It's the participants when they go, I'm not paying that and I'm out of here. So if this took 10 minutes or 5 minutes to define, I might have one big bar, but I can operate right here and right here, you see. So that's kind of what I do. So I don't use the clock because to me, it's an impediment. It doesn't represent what I'm trying to do, which is interact with participants in their pricing discovery. Their pricing is not based on the time. So this, as long as we're under here, is going for that. Not a recommendation. So this here, I would not have gotten this as a short. For me, this is the short. And then it's trade management now. And now there's some possibilities. Let's always think ahead. This is the target, which means nothing. It's like, yeah, sure, we'll see you later. And then there's potential to come back in and come back here. Two possibilities. Mean reversion, who knows, or statistic. And here's what you do. If you're in Trader Lab, you don't know. Write that down. The outcome of any trade, any interaction with the participants is random. Why is it random? Because we don't know if right here, this seller in these 595 stops were absorbed. Who's absorbing? How about the iceberg? How about this iceberg? They are buying on the way down. Here's 1,000 stops came out. Here's 2,000 icebergs. We're buying up here. They are buying. Now, does that mean you get long? No. It means that the sellers are being absorbed. Now, icebergs, all that, you don't know their agenda. You don't know if they were short. Like this guy, 1,500 up. Are they covering or are they getting long? I wish I knew, but since I know I don't know, I've got to watch the behavior and try to read what creates it. That's the auction. That's why I use volume profile, because I don't know. I have an order flow tool. I know it gives me good insight, but I can't predict the future. I only have probabilities. So if we're in a gaming environment like casinos, I know the outcome of any trade is random. I know that maybe it'll never get back here and we'll get here before we come back up here. And I know I don't know. So write that down. You're not responsible for predicting. You're responsible for having a vetted trade plan that you have created outside of trading hours, where you've researched it and you know where your trades show up. You know what the probability is of getting risk neutral versus taking a full stop first. You know how to manage the trade, and you know where the potential targets are. And then it's, as they say, let the chips fall where they may, because that's trading. I hope you get something out of this. And this is Trader Lab. So there's nothing more to do except follow your plan. If you're making it up as you go, that's not, casinos don't make it up. They don't change the game. They don't, I always think of blackjack because it's 7 cards. They play them the same way. They don't know what's coming out of the deck, and the gamblers, they don't know how the gamblers will play their cards. They don't know anything. They just know that over a large sample size of interactions with the gamblers, they get more coming across to their side of the table than the gamblers do, even though the gamblers walk out with cash. That's what keeps the gamblers coming back. So this is very important, what happens right up in here. Remember, we're in a two-sided trade. This has a statistical probability, but we're also in two-sided trade. It can do anything. So I don't have any, for me, no clue. So I don't worry about it. So high volume node, which was created by this. Stops are here. These last sellers who were absorbed. See, this is kind of how you can put some things together. This is where the buyers ran out of gas. So this is where buy stops are here. This is your micro high volume node right there. So we want to see right here what happens. Let's observe it. Absorption. Sellers are on this side. Let's see what if we get a reaction here. So either we're going to squeeze the stops out right here. So we want to watch the behavior here. Absorption. So we have to see 197 stops coming out here. Do we get more buyers here? So let's watch it. This is important right here. Not a recommendation. I'm going to open it up. Buying above here, not good for the sellers. We're taking the stops out. We're out here. Stops are above this. Hold on. This is important behavior right in here. So let's see what it does. I don't call trades, so we just observe behavior. And remember, if we come through here, we'll potentially come back here. If not, we can continue down. It's kind of a over-under, if you will. Okay, so it's right here. We'll just see what it does. Now, right here, I'll see the buyers. Let's watch. Micro high volume structure. Sellers here. Buyers are sitting right here. We can't get above those buyers. We'll get a rotation. Let's just see what it does. Light selling iceberg. Microstructure. Potential trigger. Not a guys, don't you dare trade. Remember, I don't call trades. You don't need me to help you take a stop. So this is important, this behavior here. So we're working a potential trigger here, but we can't have buying above this. Okay, so you see buying, there's no trade. So when I come to location, I'm doing exactly what you just saw me. Now we're out here. This is still an area. It's low volume and there's stops above here. Let's look left real quick. Stops are here. IB, okay. Absorption. Let's watch. Watch the behavior. Outside edge. We're still pushing in, so we're setting up a mean reversion here now. So the shorts are now longer on the table at the moment. This is where we're going, potentially. Not a trade recommendation. So the market, it might be done. I certainly have no clue. It's not my job. I know the higher time frame is up. I know the market goes up to go down and goes down to go up. So I don't have a trade here. I have nothing here now. Now the possibility is a long to here and then to squeeze all the shorts out. So let's look. But for me, I can't operate here. I know I can't get short now here. I know that I can come here. And this is called balance, by the way. Here's how you know, and balance is two-sided trade. You have VWAP, mid, and VPOC in alignment. So we are not trending. We are rotational. This is called balance. And the market tends, underline, to come back here. So we'll see if it does it. So this is important. So initially, we got directional. So these are directional trades. This is a legitimate short in TraderLab. When you come back inside, the short is over, and it's now we're back in two-sided trade. So it kind of sets this thing up. So we'll see. So I have nothing going on here. But I will say now that IBM Park, not taking any shorts, and it can do anything. But this is potentially where we're headed. So it's subject to your trade plan. And this is dangerous, naturally. Where's our outside edge? It's here. Where might you be getting long? Here. Not a recommendation. Going for that. Let's just see if it plays. And this is TraderLab, but you've got to really be nuanced and be able to trade, you know. So where does this trade fail? Let's look. Well, back under here, under this high volume, and it can do it. I mean, it's sloppy here. So, and it's lunchtime. So this is not a trade recommendation. What I'm going to say to you is, based on the configuration, this is where it might go. What you don't know, and this part of the joy is, does it pull outside and then come back? Or does it never come back and it just comes up here and jumps out the window? But in mean reversion, this is the target. So let's see. Because it doesn't have to just go up from here. You know, it can rotate outside and do anything. This is trading. But let's see what it does. Any questions while we're hanging out on this thing? Let it ferment. JT, the chart volume profile allows me to see this microstructure. This is too high now in the micro. So if I can't get above it, then I'm going to counter rotate. That's what it tells me. It's inside of this. So while I have the full day here in the micro, I can isolate this. So it's just whatever I want to see. You know, if I isolate this, I can see this. I don't really see it clearly in here, or this one here, or this one here. These are all microstructures. So right now, this microstructure is suggesting maybe we're going to do a little rotation. I think, when I say I think, just what we call a guess, that if I clear this, which is now my micro resistance right there, that I come here. This is a fractal. This little high volume is the same as that, except this is in a micro time frame. And notice what it's aligned with. So I can anticipate a rotation here. But I also know this has more force to it, more attraction. So this is like tissue paper. So it's not strong, but it's structural. So if right now we're rotating away from it, suggesting a downside rotation. It's a micro trigger. So we'll see what it does. If I come back down to other areas where the sellers were trapped, I might hold this one. And then if I come back across this one, I go here. So that's kind of the thinking here. So we'll see what it does. This is the auction. So the thing about the auction is it's not rigid. You know, it's not like, oh, it's going to do this. No, I know what happened here. Sellers took a shot here. They got absorbed. There's my volume. IB. This is a IBF. A pullback to the IB is a long structured trade in the TraderLab back here. Not a recommendation. I don't call trades, but this is all structured trading. And the thing about these levels, they're not walls. They are areas. It's very important. If you understand what created this, that seller hook on the hook, and the buyers took over, and here the sellers took a shot and the buyers absorbed them. In other words, selling absorption. Buyers took them on. You see? Well, that tells me the buyers have appetite. So if I can stay above the last location, which is down here, I can get long. And now this is a problem. I don't like this. What am I going to do about it? It might be this guy. I don't know. And if I can clear this and get over these sellers, you see, I got to clear these sellers to get here, which is mean reversion. So everybody's got to decide their trade, you know? So let's watch. And our high volume is here. So what I try to do is I look where sellers get caught. They got caught there because they absorbed the buyer and the buyer pushed out. We had a seller here. The buyer pushed the seller out. We had a seller here. The buyer pushed the seller out. I come back here. Where's the last place? Well, this is where I was saying this is what it has to hold. Doesn't mean that's right, by the way. I don't know. You know, it could be, how far away do you want your stop to be? And this guy pulls now. So what was this all about? Is it possible this algo just wanted to buy at a better price? Threw this in there. Everybody does the Acapulco cliff dive. Now we revert back. This is order flow, and nobody can. Now you can't predict. Maybe you can. I cannot predict that this will happen right here and create a reaction to it. It's part of the randomness of trading. But I do know a couple of things. I know if I got long against this, which is where my long would be, I have to look left and I need to be away from. In other words, if I execute here, I'm not putting my stop here. And I know this is my location for the long. So yeah, you could have got long here. If you keep your stop there, you'd be stopped out. If your stop is under here or down here where the sellers, this guy here is the last seller who got under the bus. They tried here, but you can't micromanage this thing, or you're under here. So this is still a valid long back to here. And you can get stopped with the best of them because we all take stops. Mean reversion. Why is it mean reversion? The market's in balance. And it can still fall out, you know. I mean, the point of this is if we can't get back here and we come back and fall out. Now, this is a stop pick, 121. Thanks for playing. If we come under here, then we have more downside. Then maybe, you know, we'll go lower. But right now, this is where it looks like it's going. IBF, structured trade, Trader Lab. And it's hard. Mean reversion trading is, you guys know, I always talk about it. I say, you know, it's difficult because where's the outside? That's what you're battling in this. So it takes patience and discipline. Oh, hi, Tanya. Thanks for visiting Trader Lab. The FVP is the full session volume profile. And all this is showing me is all the volume starting at our ETH. So in the morning when the RTH opens, this is showing me the ETH. And then as RTH comes in, it just adds to it. So it's not relevant for me now, but it is when I start out with the RTH. So I have it on there. So I can see the auction, the most recent auction, which was ETH. So ETH gives me important information. Here's another piece that I didn't really get into. This is the highest volume from the ETH. This was your retail price. Yesterday's highest volume was right here. They're right on top of each other. That also suggests balance. In other words, pricing hasn't changed much. So the market can rotate around these things. So we know that, but we don't know if it's just going to take off, whatever. You know, this is part of the joy. But once we're in balance, And once you have this, you are in what's called mean reversion. So anyway, this is the target here now. But what's important here, and what's so important about the stream and the Trader Lab, and this is very hard, by the way. What's hard is being an environment that's constantly changing because it's responding to the auction or the participant behavior, and it's random. You have no idea what's going to happen. Theoretically, this is what's going to happen, but it may go to zero before it gets there, right? So what you do is, if you get long, you have to have proper risk management. In the Trader Lab, we talk a minimum 2-lot configuration. First, the job of the first contract, and everybody has to vet this when you come to Trader Lab, trade plan, is to get risk neutral. And what's here? VWAP, VPOC, and mid. Where's the stops? And where might we anticipate a counter rotation? Retail traders who are going to go, oh, it's going down, and they're going to mechanically sell. So I know there's stops here and here. If I get long out in here, I got to be thinking about scaling here or here because it's mean reversion. That's the mean. And then ride it across, which was the trade I had on before I started the stream, which would be back to here. So it's the same trade. Remember the IBF. So this is your scale. They're very conservative. Ahead of the retail selling, we anticipated VWAP. Let's see if those mechanical sellers show up. And by the way, the gamblers get paid. So this is where you need to be scaling, and this is the mean. So this is really what we're looking at. So if you can get in over here, this is okay for a scale. Then we're going to look at counter rotation potentially or not, but this is the mean. And then if we come across, now we got to look at a little higher time frame and see where the fuel is here and up there. And where does that take us? This was my target. Remember the long I was in that went to the happy hunting ground? Same trade. IBF. Are you guys following? This is Trader Lab. Let's see what it does. Yeah, JT, did that answer your question? Great. How we doing in YouTube? By the way, if you're getting something out of this in YouTube, leave your comments. Please give a thumb up and the like. That's very helpful for the stream. This is Trader Lab. It's based on structured trades. There's a link in the bottom of YouTube in case you're inclined. There's 60 PDFs of these trades, structured trades, circles, arrows, diagrams, and you can take these and reverse engineer them. Notice the icebergs are buying. These are passive buyers. This is the market pulse. It's very useful. What was this? Remember? Absorption. These guys got absorbed, right? Where's the structured trade? Here. Here. And then squeeze Ethereum. Imbalance. It's mutual abuse. Everybody gets abused because most traders who do not understand something called context only have one way to trade, and that's sell the mid or sell the VWAP, and they're going to be selling this because they don't understand the condition of the market, which changes, by the way. So the market can be rotational, which is what it still is, and then it got directional. So we played a directional trade. Then it came back in. Now what? Not so much, as they say. Now we're back in mean reversion. I got something on here that shouldn't be here. Hold on a second. So this is your long, and this is Trader Lab. Now, whether or not you want to trade this thing, that's up to you. I think it's okay because I'm trading structure. If you find that you're constantly tuning, tweaking, fixing, because you have by the way, gamblers win. And I know for me, I was continually going back in with the screwdriver, trying to adjust, fix, tweak, tune, make it better, right? And I had a defective belief. I thought I could predict, and I thought if I just fit things a little better, I get better results. Because I was winning with my process, you see, and then losing. So winning and losing. So when you're losing, you're going, oh, I guess I got to make it better. So you're constantly making it better, but it doesn't change anything. That's called curve fitting, and we know that doesn't work. I didn't understand that back in the mid 1980s. I started in 1980, and then the technology, we were just getting really software. My first computer was an Apple IIe. Pretty excited about that. And then I got the ability to start programming and rotating systems and did backwards testing, walk forward testing, and that was all about fitting, going back, and there was still indicators on steroids. But you're still trying to, quote, predict. Well, maybe you can't. Maybe all you can do is align. So this was before day trading, and this is when I was managing dollars, and it was trend following, so it was not this. But remember, the market's fractal, so everything really is the same. It's just time frame or fractal oriented. I just traded in a much higher time frame, trend following. A lot of currencies, bonds, all this kind of stuff. Everything. Trade everything. S&Ps, the big S&Ps, swing trading. So for me, short-term trading was 2 to 3 day swings in a volatile market. Otherwise, it was hangout. And other products too. But neither here nor there. So, but I didn't understand at the time. I was trying to get something that would repeat because I believed the market repeated, right? So I just had to fit things so it would catch it. I coined the term trader groundhog day. That's when you work hard and you keep waking up with the same result because you're thinking you're doing the right thing, but maybe you're not in alignment with the business, with the way this actually works. Because we come into the business with indicators because, you get a nice software toolbox. It's got everything but the kitchen sink in there. So you think, well, let me get the right time frame, the right mix of indicators. So we put more indicators to create more certainty. How about we have no certainty? We have randomness. That takes that certainty need, which is a psychological need, off the table. Then it's about understanding market mechanics. That's called context. And this is what you would learn in Trader Lab, to understand the condition of the market and how it changes. If you can recognize change, and you don't know till you know, then you could have a trade plan that would get you long here, to scale here, and would take you out here. And potentially, because remember, the higher time frame is up, potentially to come out the high, wherever that is, the IB high, which, let me see if I can find it on my chart. 52 and change, right? So that's possible. Well, Tanya, what do I suggest to focus on when learning Bookmap? Well, it takes time to learn the tool, Tanya. I'm getting a question from Tanya. Thanks for the question, Tanya, in the Bookmap YouTube channel. By the way, Tanya, if you want to learn more about Bookmap, there's an incredible base of education that you can watch. The bubbles are the delta. It tells us who the aggressor is. It doesn't tell us to get long. It tells us the aggressor. Buy stops are market orders, so they're going to show up as aggressors. Notice we're getting absorption here. So these buyers are being absorbed by sellers, of course, but these are passive sellers. In other words, they're not hitting it at the market. The buy stops are market orders, so you see green delta. These guys are passive. I think I'll sell some of these here. So as long as the buyers have appetite and they're absorbing the sellers, we can continue higher. At some point, if the buyers get fatigued, and remember, my target on this trade was just out here, right? Because this is the trade I took earlier. Then these buyers may exhaust, and then we counter rotate and we can come back here. So this is called mean reversion. Now, it can do anything. So for me, my trade, and this is just the way I operate, I'm not saying it's good, is here to here, out here. The trade is over for me. if I was, this is a trade I take. This is a trade I came up with, many years ago. So a lot of this stuff now is out and about, But when I started doing this, it was very early on, and before really even volume profile, it was because I learned market profile. Notice the sellers now are aggressive. These are passive sellers. So and the passive seller is those guys, the iceberg. So a passive seller is like a limit order. So this is a passive iceberg seller. And notice what's going on here. And where does that take me? Here, outside in. Outside in. So this is called mean reversion. If you're in Trader Lab, you would learn this. Yeah, Tanya, there's a library of webinars. I don't know if you've come to Trader Lab, but there's a link in the bottom of YouTube. There's absolutely no cost to become part of a professionally oriented, serious, no-nonsense community. That's what it is. The business of trading, we need to understand the business. Most of us don't. Most of us, we come into this, we kind of have a fantasy. And then we kind of take this fantasy and we build our beliefs around what we think it is. But for most of us, we really don't understand what this business is. And we can go in a direction where we're trying to get this behavior to fit our beliefs. What happens if what we believe is not in alignment with the reality of the business? Then we're always going to be trying to fix something that is broke, but we're not really repairing it. We're just doing manifestations, or you might say derivatives of a process that doesn't work. That is important, I think, to change. If for anyone who's not getting their results and keeps waking up a trader groundhog day. This is about building the business. This is about high-tier tools. This is about understanding why the market would come out here and why it would be a target. It's about understanding why this set up a potential short back to here. Now, I wouldn't take the short. I'd just be out of the long. Just because, I prefer this to this to this, and then let somebody else have the fun. And then mean reversion is back here, and then potentially around. So, or just back here. Notice the liquidity. This is what you're going to learn. Now, should you be getting short here? It's all a function of trade plan. Do you know that this long is the same as that short? Because it's mean reversion. Mean reversion. This is the same. This is a specific plan for this condition. Now, you can just take one side of it, or you can take both sides of it. This is trade plan. This is Trader Lab. Hope you're getting something out of this. Tiny, is that helpful? Cocobolo, how you doing down there? How's Nicaragua these days? A lot of rain? Good, Tanya. Click the link in the bottom of YouTube if you're interested in Trader Lab and the business of trading. Trader Lab's really for serious traders. Today I've been cruising around the internet. It seems to me that the new video game is prop firms, and a lot of kids are coming into this, and the failure rate in any trading environment is extremely high. Anybody can go on YouTube these days and profess anything. So no matter who it is, what it is, you need to vet it, whether it's Trader Lab or anybody. And the thing is, with all this information out there, anybody can say anything. Personally, if you find somebody credible and they have a subscription or, one of these things, if it's credible and you really have to do your homework, that's something, that's one thing. But everybody is out there marketing, and, it's just amazing to me that anybody can do that. So, Trader Lab, there's no cost. And I think if you come to Trader Lab, you're going to find it very different and rather exceptional community. And I invite you all to click the link in the bottom of YouTube. Take advantage, download the 60 PDFs of structured trades, start going through the library of webinars, which show you this, some of them up to 4.5, 5 hours long of real-time narration. You can see it, develop, kind of like this trade down here, same thing. And the target up here. You could see this like 4.5 hours of this in rocking markets, as they say, and just rotational or slow market. It's all the same. The thing to understand about trading, when you have a structured trade plan, you're trading in fractals. The speed you have no control over. You only control what you do in relation to a vetted structured trade plan. Then you use a high-tier tool to help you see inside participant behavior. I call this the tip of the spear. So, so what is this trade? Here to here to here. If you want to be counter trend, now for me, I'm leaning more short than long. Why do you ask? Trend is up. So for me, longs, not a recommendation. By the way, there's nothing wrong with the short. See, this is the thing about fractals and time frames. You could be long, short, whatever. But for me, I'm only on the longs because the higher time frame is up. Now, it doesn't mean I won't get short. I'm saying is, I think if the market is short, that there's fuel buy stops up above swings. And it's not a recommendation. I just take the trades I think have the better probability. And I'm as wrong. It's not even right or wrong. It's just random. So I could, be thinking I want to be long. Well, it could come down and do whatever, right? If you can accept, and this goes for all of us, that we don't know what is going to happen next because the participants determine what's going to happen, not an indicator and not, the full moon. Then you just try to stay in alignment based on a structured trade plan. And if you have done the work and vetted it, and you put these pieces together, you can actually create process. Process is a if this, then that. If not, then what? If this is too low, if this, then that. If this is now fair price, then what? Then out to the low volume node. If I don't get through, if I get to the low volume node and I don't get through, so if this, then back to here, then that. If I come back outside and I don't get below here, then what? Then I come back here. I don't know. And then I can come back here and the shorts in here can get squeezed. So again, I'm just going to mention, for me, it's only longs. But if depending on your time frame, you could be doing both of these. You could be trading. If you're more scalpy oriented, I try not to do that because it's fatigue. You get tired. If you're doing a lot of active trading, I get tired. So I try to do is take the trades that I perceive have a little more potential. And maybe with the market being short in an uptrend, my path of least resistance, now that the market is short, think of the logic, is to squeeze. So for me, longs only, not a recommendation. Please give a thumb up in YouTube. Appreciate you guys visiting the Trader Lab. Come on over to Trader Lab. Take advantage of all the resources. And by the way, there's a lot of additional education at no cost in the Bookmap Discard Trader Lab. This is what these look like. Circles, arrows, explanations. If you come to Trader Lab, ask Trader Lab participants what they think. In other words, what has their experience been? What was the first trade they took and reverse engineered and built into a trade plan? What do they wish they did differently? What has worked for them? What hasn't? What is their obstacles? Ask the participants. You can also read the reviews on Trustpilot about Bookmap and the Trader Lab. There's a lot here. And remember, these are not mechanical. These are based on how the market works. Do you understand how the market works? Do you know how to get in alignment with it from time to time? And again, everything is random. There is no holy grail. I wish there was, but there isn't. So all we can do is try to have a statistical edge and operate like the casinos do. Only play games that have an edge, not be attached to the random outcome. And then put your helmet on, and over a large distribution, assuming you've done the work, and if you come to Trader Lab, there is a lot of work to do to build the business. You want to have a business? This is what it takes. Imagine having any business. All businesses have cost of production, overhead. For us, it's losses, and of course, fees. If you understand it and you can accept the random outcome, you're going to see this business differently. You're going to approach it differently. And your job is no longer to predict or be right. Your job is to follow a structured, vetted trade plan. And Trader Lab and the Bookmap community can help you accomplish that if that's your goal. Thumb up, please, on YouTube on the way out. Click the link in the bottom to visit Trader Lab, download the resources, join a terrific community of serious traders who have come together to leverage their collective experience so we can all do better. If you're interested in doing better and you're not satisfied with your outcome, come to Trader Lab. On the other side, if you found the Holy Grail, I mean, I'm kidding, come to Trader Lab and help us get better. That is the basis of the Trader Lab. Thumb up in YouTube. Thanks again. Remember, if you're in Trader Lab, these streams are available exclusively to you to reverse engineer, screenshot, and circles, arrows, and build your library of structured trades. Thanks again, guys. Look forward to seeing you tomorrow, and thanks for visiting Trader Lab today.